So a new all-time high is here in Bitcoin. Finally. But for me personally, I see a lot to worry about. I do not at all feel like partying yet, and I'm gonna share exactly with you why there's plenty of data that keeps me rather critical and why me personally, I'd be more looking towards taking profits rather than getting into Bitcoin with more of my money yet. And that's why right after the intro, I'm gonna show you some of the data. I'm gonna show you our macro outlook for both Bitcoin and Ethereum and our most imminent target zones. Stay tuned. So Bitcoin has just seen a tremendously violent rally with 50% gains in one single move without any mentionable corrections in between. And so while that comes after this prolonged bull market starting from 15,600, I do believe, all the way up to 108,000. Most people do believe that obviously we are in a bull market, obviously, right? But not so quickly. There's lots of ways of interpreting and telling whether we are in a bull market or not. And I'm gonna show you one way that is questioning the whole topic of a crypto bull market altogether. Well, at least for now. And that's this chart that I brought here for you. What you can see here is on the upper line, you have the total 3 versus Bitcoin. Total 3 meaning that is all the cryptocurrencies except the top 10 coins. So obviously there's no Bitcoin in there, otherwise this wouldn't make any sense. But also there's no Ethereum, for example, currently Cardano, Ripple, and all those other cryptocurrencies that are currently at the point when this data for the chart was taken are not in the top 10. So all the underdog coins, you might call them. And why this chart then is interesting to be divided by Bitcoin is that usually whenever we are in a crypto bull market, people like to get more and more risky and they jump more and more into even smaller projects, smaller coins, because they're chasing all the bigger gains. And while more traditional investors might maybe consider Bitcoin already super volatile, and in some ways it is, real crypto nerds seek even higher volatility. And that's why they be jumping into these small market cryptocurrencies. And that's why in real crypto bull markets of the past, those small cap coins always outperformed Bitcoin. So for example, here back in 2014 all the way to 2016, we had a rather shallow bull market because back then cryptocurrencies wasn't really a thing, was just for the nerds, just for the geeks. But then the 2017 bull market rolled around and we saw massive increases in coins, for example, like Stellar, coins like XRP, XM Infinity, I do believe. XRP, for example, in this bull market here has gained 36,000%. So a 360-fold increase in price. Mad stuff. And so then another bear market followed, and while Bitcoin experienced a violent sell-off, the sell-off in the altcoins was all that much more violent. Then same story leading into the 2021 bull market. Here we had this little COVID downward peak. And then for the 2021 bull markets itself, same story here. And now it gets interesting because ever since the 2021, the second 2021 bull market top, we have been in a so far not yet broken downward trend of total 3 versus Bitcoin. Meaning ever since the beginning of 2022, so for the better part of almost 4 years now, you have been losing against Bitcoin. So everybody who has a well-diversified altcoin portfolio of potential high flyers and high performance, they have been losing ground against Bitcoin. Sure, they saw a few gains, but what's the point in holding those volatile, super risky altcoins if you were better off just holding Bitcoin in the first place? And in all of that, I have yet not even mentioned the lower line. So the lower line is the yield of US treasuries. And so this, by most market participants, is considered the benchmark, if you will, the benchmark for no risk or low risk yields. And why that should be interesting is the following. So there's a lot of institutional investors out there, right? There is not just you and me that have a couple of bucks saved up that we want to bring into the markets, but there's also institutional investors that have huge sums of money. And if you have millions or billions and billions of dollars, if you can get a US treasury that maybe yields you, for example, 3% or currently even all the way up to 4.5% annually. That's quite a bit of pocket change to live off. So to give you quickly the math, right? If you have, for example, $1 billion at your disposal and you put it into US Treasuries currently, you'd be collecting a capital gains of $45 million annually. Not too shabby. And that's why in all those times when the yield of US Treasuries, the so-called no risk yield that is available to you as an investor, is falling, then of course riskier investments like cryptocurrencies, for example, become all that more interesting. And if you have, like currently, the chance to collect 4.5% of annual yield at no considerable risk whatsoever, why should you go into highly volatile and risky cryptocurrencies? So that's the logic here, basically, why all the time when we saw falling yield of US Treasuries, we saw rising prices of Total 3 versus Bitcoin. So that's when we experienced a real bull market. And whenever the yields of US Treasuries were rising again, we saw a bear market. Same here. Falling yields, bull market. Over here, rising yields, bear market. What followed was hugely falling yields, another bull market. Then quick COVID crash, again, rising yields, bear market, falling yields, bull market, and now for the better part of the last 4 years, rising and ever rising yields. And even though Bitcoin was rising, we saw by that definition a full-blown bear market in cryptocurrencies of the Total 3 category. So that was now a lot of foundation, but it is important for what I am about to show you, because otherwise you would not really be understanding why we currently are looking at taking profits and why we see lower lows to come in to Bitcoin rather than a new all-time high. So on our most imminent outlook here, we have the 8-hour chart, and we have currently, to start maybe from the election of Donald Trump, for example, we have so far from this low point here seen a 1, 2, 3, 4, 5 waves upward structure leading into this overreaching wave 1 top. And ever since, we have seen a corrective A wave down, and we estimate that we're currently in a counter-corrective B wave. So even though we have already seen a new all-time high, dependent on the exchange that you're trading on, at roughly 111,500 during this last night. And even though we see in our primary scenario a target zone of substantially higher prices than the last all-time high, so roughly at least 7.5 all the way up to potentially even 20% higher than the last all-time high, we still see this rally as only a corrective move, a counter-corrective move to this huge overreaching correction. So after the completion of this A, B wave move then into our target zone, we estimate that from this point onward, we see drastically falling prices. So for example, if we just take the middle optimum target for our correction that we have established all the way only to the top of our then following target zone, that is already a 50% sell-off in Bitcoin. And that is not just some move that we see some ways in the future, but that is the most imminent move that we see directly after climbing just a couple of percentage points higher in Bitcoin. We do not, and I repeat, we do not see 250,000, we don't see 1 million, and we don't see 400,000 as the most imminent price target for Bitcoin. Sure, some point down the road, for sure, and I'm gonna show you our roadmap to this point, but for now, no. I repeat, for now, we do not see that in the charts. And this target zone that I just showed you here is not even the end yet. So after this target zone here, roughly in the ballpark of 51,000 all the way up to 62,000, we would then see an overreaching wave B. So this A, B, C move here is only the underlying structure to this overreaching wave A low, and we would then likewise, as in the internal A wave here, see another B wave here as a counter-corrective move, and then a final C sell-off to complete the overreaching wave 2 here in blue that would follow this overreaching wave 1 here in blue that we established in January of 2025. And as you have maybe already spotted here, we also have an alternative scenario marked at currently a 30% probability of the wave 1 top not being in yet. And for this count, we would then see here not the wave 1 top, but rather an alternative wave 3 top, an alternative wave 4 low here, and we would then rise all the way roughly in the area of 140 to 150 to establish this overreaching wave 5 of the overreaching wave 1. But either way, even in this case, what I'm going to show you on the next overreaching chart still remains true and remains our primary scenario. So even if we establish a higher wave 1 top that I just showed you on the more imminent time frame, even then we would still see a lower wave 2 to follow through. Then of course this target zone would have been adjusted to the upper end and we would give out a new target zone if that alternative scenario was to unfold. But still, that would not at all change our scenario of not yet reaching a bull market high of 250, 400, you name it, but we would still see a sell-off, and quite a strong sell-off indeed. So for example, from only our current price points of roughly 111,000 to this most imminent major target zone that we establish on the 1-day chart here, that will be overall roughly 65 to 70% sell-off. Sounds pretty unimaginable, yes, of course, but remember, we started off this bull market. We started it off from all the way down at 15,500. So even if we were to drop into this overreaching target zone here at roughly $37,000, we'd still be over 2x up from where we started this bull market off, right? And then from this target zone that I'm showing you here on the overreaching time frame, then the real fun and the real party starts, because from this point onward, that's where we finally see the bull market to really gain traction. And of course, I'm quite aware that with this count, we might probably break the time frame of this traditional 4-year cycles in Bitcoin, but so be it. I can only tell you what we see in the charts, right? We are now 4-year Bitcoin cycle analysts, right? We're Elliott Wave analysts. And in our experience, Elliott Waves do reign supreme because they incorporate market psychology, they incorporate human psychology, so the psychology of all the market participants, every single one, trading, selling, buying, and this psychology and the then building market structure is that much more powerful and indicative of future moves than some 4-year cycles. And if we, in a move like so far, see a brittle underlying structure, there's no other way for us than to interpret it as a huge correction being overdue to lay the foundation of future rising prices. So as we then quickly jump into the 1-week time frame for Bitcoin before we dive into Ethereum, you remember that we set the upper limit of our target zone, which we do not have on this overreaching time frame because it's a midterm target zone. Upper limit from this target zone was 37,000, for example. So from this upper limit then of the target zone that we expect in the midterm outlook, that would be 430-450% roughly up until our next long-term target zone. So solid gains here to expect. And all the way, of course, all that much more gains than if we were to directly from current levels rise in one go into this target zone, because then we would not even see 100% gains from here onward. So even though this scenario would hold quite a bit of pain in the meantime, in the long run, it would hold that much more rewards. And so to then wrap up Bitcoin, what about Ethereum? For Ethereum, the story is somewhat similar, but also somewhat different. So with Ethereum here, you can already see what I was talking about all the way in the beginning with this dispute whether or not we're in a bull market or in a bear market. Because with Ethereum has so far in this cycle, in these last 4 years, established a high of roughly $4,100, and that is quite a bit lower than even the high in the last bull market. And it becomes all that much worse in the imminent time frame because, I mean, you saw what I just showed you, right? Bitcoin has a new all-time high already. Bitcoin currently is a couple of percentage points up from its recent all-time high, which was back also in January of 2025. And so whilst Bitcoin is 3% up, Ethereum is currently still 36% down, and that comes even after this violent rally from its low of roughly 1500. So Ethereum currently is 82% up from its most imminent low, but still it is 36% down against Bitcoin. So that's the picture perfect resemblance of what I just showed you of altcoins really struggling against Bitcoin, something that we traditionally only see in bear markets. And so that's why for Ethereum, we do not see much more ground to cover before we establish here this wave B corrective, wave B high, and before we then expect a new sell-off into this final target zone for the wave C to mark an overreaching wave 2 low. And only then would we see substantially and prolonged rising prices in a real new bull market. And what does that mean then on the overreaching time frame? On the overreaching time frame here, you can see it, same as with Bitcoin, only with Ethereum we expect even all that much more potential for this future bull market then. Because if we really are to dip into this target zone here of roughly between $500 and $935, that would mean that even from the upper limit of that target zone, we would see gains of 1300% up until the next overreaching target zone that we have here on our weekly chart. So that would then be the point where Ethereum would strongly be outperforming Bitcoin, something that we do expect in traditional bull markets. And that's then also the point where we see confluence coming in of the chart that I just showed you and our Elliott Wave count. Because with our Elliott Wave counts and our retracements that we expect, we see and predict in the next market move an outperformance of Ethereum against Bitcoin. And that's also exactly what this underlying chart that has nothing at all to do with Elliott Wave theory also indicated. But then, no analysis would be honest and complete without also telling you here about our alternative scenario. We do have this alternative scenario currently only marked at a 27% probability, but still, technically, it would be possible that we already yet have seen an alternative wave 2 low in. Then of course we would have seen a truncation. That's why a primary scenario is another lower wave 2 low, but technically it would be possible. And that is something that we would have to consider if we were to substantially climb above $3,500, and especially if we were to climb substantially over $4,100. But up until then, of course, there's a lot that will happen. And of course, there's a lot of videos that we'll be pumping out here on this channel. So do not forget to subscribe, turn on the bell notification so that you will never again miss another update. And if you have a bit of money invested in those markets, I would highly, highly advise you to not just wait for free YouTube videos coming out, but I would advise you to take use of our daily market analysis service. There's a link down there in the description taking you to our website. You can choose out of 200 markets. You will get push notifications, daily updates. You will get entries to our model portfolio, and you will never, never again miss another market move because you will be alerted just in time to place your limit orders and take your profits. And so up until then, have a good one. Take care. Bye-bye.